Hey YouTube, this is the Robinhood investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. Today I'm going to talk about my Robinhood portfolio. Currently I'm at $190,349, cash position of $4,511. I have another $30,000 in cash in a high yield savings account so that I can easily deploy into the market when there's opportunities to buy. Most of my portfolio is in US equities, and the market has been rallying since the end of last year. Scrolling down a bit, first position is in VOO, Vanguard S&P 500 ETF, which tracks the S&P 500 index, has a very low expense ratio, has high liquidity, and it's an efficient way to diversify. This is one of my largest positions in my Robinhood portfolio. Next is VGT, Vanguard Information Technology, which tracks the technology sector. It has a low expense ratio, high liquidity, and it's a very efficient way to diversify into the tech sector. Next is Schwab US Large Cap ETF, which is very similar to VOO. SPY, Spider S&P 500 ETF, which is very similar to VOO as well. All right, first stock is Apple, ticker symbol AAPL, which is in the consumer electronics space. iPhone makes up 60% of revenue, and between greater smartphone penetration in emerging markets and repeat customers, there's plenty of opportunity for growth for Apple, and it's a very good dividend play. And I also see their services business growing rapidly, so it's a great growth dividend stock. Next is Visa. It's in the payment processing solution space. Visa has a large market share in the industry, and its scalable nature of the business allows the company to improve its already impressive margins. And there's plenty of growth opportunities in electronics payments, which surpassed cash payments on a global basis several years ago. Next is Alibaba, which is in the e-commerce and technology company space based in China. And Alibaba benefits from the ongoing shift of China's digital commerce from consumer to business to consumers. And as of March, the annual active consumers on Alibaba China retail marketplaces reached 674 million users, which is more than 45% of China's total population. So very solid growth stock. Next is Microsoft, which is an enterprise and consumer business solutions company. Microsoft has a monopoly position in various areas like Windows operating system and Office suite. These serve as growth drivers that can be funneled into the Azure cloud computing position. And public cloud is widely considered to be the future of enterprise computing, and Azure is a leading service. Next is Amazon, which is in e-commerce and cloud computing. Amazon dominates North America's online retail category, and the company's device portfolio like Kindle, Fire TV, Echo, and other Alexa-enabled products help with customer acquisition and retention, as well as promotes Prime membership engagement and Amazon Web Service capabilities. Next is Alphabet, which is the parent company of Google. They dominate the online advertisement space. As the number of online users and usage increases, so will digital ad spending, which helps Google. Next is NVIDIA, which makes GPUs for gaming, cars, mobile computing, and they're also in the data center business. So with the increasing complexity of graphics processors, providing a barrier to entry for most potential rivals, It's really difficult to match NVIDIA's large R&D budgets. Also, the growth of artificial intelligence and deep learning that rely on NVIDIA's graphic chips present massive growth opportunities. Next is Johnson & Johnson. They provide medical devices, pharmaceutical, and consumer goods. They have diverse healthcare segments, and that helps protect Johnson & Johnson from downturns in the economy, offering a defensive growth opportunity with steady and growing dividend. Next is Boeing, which is in the aerospace and defense industry. So as spending for commercial airplanes increase from continued air travel demand and strong leasing market, Boeing benefits from these growth opportunities. And Boeing's new services unit will succeed in capturing high margin aftermarket services and spare parts sales. So this will increase revenue growth and profits. Next is McDonald's, which is the world's largest restaurant chain by revenue in over 100 countries. McDonald's has taken positive strategic moves, including refranchising more than 4,000 units and reducing annual operating expenses. And with a dividend yield of more than 2%, McDonald's is a great dividend stock. Next is Tencent, which provides internet-related services and products, entertainment, and artificial intelligence in China and globally. Tencent's online gaming business will continue to dominate based on its strong distribution capability and R&D investment. Their strategic investment in content, cloud, and digital finance will lay a strong foundation and drive earnings for the long term. I think this is a good long-term hold. Next is Home Depot, which is in home improvement. Home Depot has solid distribution and merchandising, which improves productivity and increased domestic market share in stable housing market environment. Next is United Health, which is doing well providing healthcare products and insurance services. United Health's strategy of pursuing scale across multiple healthcare services verticals creates synergies among the insurer, provider, and pharmacy benefit management segments that results in a meaningful edge over its peers. Next is Berkshire Hathaway, which is a holding company led by Warren Buffett, who has a great track record of identifying valuable businesses to invest in. Next is Facebook, which is the parent company of Facebook, Instagram, WhatsApp, and Oculus VR. Facebook's ad revenue per user is growing, with more users using the products and increase in usage time, showing the value that advertisers see in working with Facebook. Next is AT&T, one of the world's largest telecom companies. It's a really good dividend play, and it also is the parent company of the mass media conglomerate Warner Media, making it the world's largest media and entertainment company in terms of revenue. Next is Costco, which operates in membership warehouses selling a variety of products. Costco has a strong customer loyalty with member renewal rates holding steady around 90% in a variety of economic environments. Next is 3M, which is a conglomerate company that makes various products. 3M continues to benefit from its shared platforms, with developed products often having multiple applications, and 3M continues to emphasize innovation with R&D spending. Next is PayPal, which facilitates online payments and money transfers. PayPal has plenty of growth opportunities in electronic payments. And PayPal's experience in online payments is a unique asset that is becoming more valuable as e-commerce becomes bigger. Next is PepsiCo, which provides food, beverages, and snacks. PepsiCo's food and beverage businesses has helped it capture synergies in distribution, marketing, and technology, as well as economies of scale in international markets. Last but not least is NextEra Energy, which is in the utilities sector and provides electricity and other energy sources to consumers. That's all in my Robinhood portfolio. I plan to continue holding these stocks and ETFs and buying more stocks, preferably a good balance between dividend paying stocks and growth stocks. I also plan on increasing my cash position. It's currently at 4,500 in my Robinhood account and 30,000 in my high yield savings account. But I want to get this to at least $40,000 so I can easily buy when there's opportunities. That's all for this video. What moves are you making in your portfolio? Comment down below. Remember to use my referral links below, and both of us get $20 for using personal capital or a free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.